Right, so I'm just going to have a quick look at EuroCAD because I just want to look over what Kev's posted about, see if I can find it. No, something like this here. Yeah, with this here. So it's the same system as the rest. Obviously, it's filled. Hopefully, filled an imbalance in here. It would have come out of the agent session, I'm guessing. Oh. Yeah, come out of the agent session, filled an imbalance, change of character, mitigation. So it's just. He said he couldn't see what its imbalance is filled, so I'll just dive down and have a look. Looking like it was that way. I can't remember it, to be honest. So, seconds. So, this will be the one. So, I mean, for you guys that do look at the seconds chart, this, I mean, we're on the 15 here. This big up candle directly followed by a down candle is obviously on the 15. It's just two candles side by side, but on the lower time frames, I'm assuming it's going to be a BPR of some sorts. There you go. Start to see it on the 10 seconds. So if Kev is watching this back, obviously there's a. I know we're on the 10 seconds, so I'm not sure you'd class that as equal highs, but there's a wick high there, tiny bit of imbalance just below. So imbalance there, and obviously I'm assuming on the 5 second it was slightly different again, which is why me mark would have been a touch higher. Yeah, there you go. So yeah, it's tiny, but it's valid. So yeah, it's. I was worried in case I posted something that was like a load of crap. Yes. Take that off. But yeah, the system works on. It works on every pair. You know, it's nice and steady. The important thing is that obviously it's filled this imbalance in here. Broken 1 minute low. So obviously as soon as it broke below this low, you've got push up here. Just gonna read the comment as well. Madness, yeah. Yeah, it is mad, Tom. It's the accuracy at times is silly, really, you know. It really is. So obviously what we've got here is obviously we're on the 5 at the minute, but you could have maybe considered that as change of character actually. So low, but it does take the high there again. So this low puts in that high, but it breaks both before coming back. So change of character below here. Stephen in. So yeah, obviously as soon as it breaks low here, obviously it goes and does its thing. Comes back, obviously it's created liquidity under here as well after the entry, but before the entry we've got possibly that as well. That sort of going on. Some of that maybe might be a stretch actually, but yeah. So as soon as it broke below here, anyway, if I was looking at this, I think I actually just posted this one just for people to back test so they can. I think I might post it early Friday or something, Thursday, Friday. But obviously, I'd rather you guys say have 5 or 6 to back test in a single back testing session rather than trying to find this every day and maybe finding one. Some days you'll find none. Some days you'll find 5 or 6. Like Friday was Friday. I think Friday had 6, maybe 7. All the same setup. It's just obviously it's just proof that you don't really need more than one system. So, and that's aimed at you, Stephen Bundle, as well. So,
Lee, do you just choose which ones you want to go for? Do you just keep to one if like 6 opportunities come up?
so I mean, my main system, I look at nearly 30 odd pairs, mate. So I don't trade them all as such, but
Yeah.
I look at the main. I think there's 25 forex pairs that I'll look at, and then I keep an eye on gold, oil. Sort of look at the US 30 and 100. Keep my eye on Bitcoin as well. But for this, mate, this system, it's simple enough. You can easily get 2 trades a week. So, I mean, I took Euro USD on Friday.
Yeah.
Might have seen it already. So it was this here. It's buy. Same again, mate. I must have had this imbalance along here marked for. I mean, this was Wednesday, so Wednesday, a couple of days, left it alone. So it's tagged it Friday morning. The structure on it was quite difficult. It's not the easiest price action to have decided that it was a change of character. I'll just show you why. And then I'll get back to the actual question, mate. Yeah, so I decided that this wick high was me change of character. It's normally I'd be saying I want to see more up candles. So this was the safe option possibly, but I decided that this one at the time was good enough for me because it was such a good imbalance fill along here with trendline liquidity as well. So there's a lot of liquidity under all this wick here. It sweeps it into an imbalance fill. Structure's heading that sort of direction as well. It's slowly heading up. So I was possibly thinking it might make a new high. I don't think it totally went to the higher high, but it went tested this high up here. So it was a decent move anyway. I didn't hold it that long. I literally held it to this first. Take profit mark here. Because I thought it might fill this. It might hesitate or reverse from there. I think my TP was an hour or so before news as well, so I thought just take it, not worry about the rest of the day, not worry about going through news, just have a nice easy day. But it did.
Big enough, isn't it?
Yeah, I mean, it's a 1 to 14, mate. It's yeah. I mean,
back it up and go home.
Yeah, I think it went. I think it was just shy of up here, so I think it went 1 to 30 odd in total. It was just shy of this TP line up here, and it reversed completely. So I'd have maybe, if I was in it and I'd have held it, I think I'd have been maybe on the wrong end of that, like retracing now, to be honest. I think it's like a pip short of the blue line here, so.
Yeah.
And obviously it's reversed hard, so I'd have been, if I'd have set that as a TB and left it, I'd have been crying about here, I think. But obviously the system's not designed for massive holds anyway. Sorry, I'm just going to read this question. Sorry, stupid question. How come you have only A's your sessions back? But yeah, no, that's not a stupid question, mate. I'm not too bothered about the London and New York session. We sort of view the Asia session as consolidation, so I only have that one marked purely because I'm looking for price to sort of break out of the Asian session and then basically fill an imbalance, change of character, break of structure, whatever you want to call it, and then mitigate an entry. So you see it here, it breaks out, nearly fills the imbalance down here. I'm sure it does fill an imbalance. So there's possibly an entry at the bottom here, break structure from here, breaks here, mitigates, possibly buys up. Same here, it breaks out, fills an imbalance, change of character, mitigation, buys up. So it's only, I've only got that one marked because that's the one I'm looking for it to sort of anchor a time for me. I don't necessarily believe that the Asian session is super important, if I'm honest. I think it's important from the fact that it is viewed as consolidation. But if we look at NZD USD and NZD CAD, we get exactly the same system, but it doesn't break out of the Asia session. So what we've got here is obviously this low here is the low of the Asian session, but if we turn that off, all it's done again is it's filled an imbalance, it's trending upwards, it breaks, change of character here, mitigates an imbalance, and then buys up. So I use it just to anchor a time for me in the day. I prefer the ones that do come out of the session, but I don't think it's super important. Just before I answer your question, Stephen, mate, I want to get back to James's question. So Paisley at the minute, because I'm working, mate, I'm working 12-hour days, 6 days a week at the minute. So I'm mainly keeping my eye on EU, GU, and I've started to watch a bit of gold as well, mate. So that's just 3 pairs. They're all very similar pairs in such. Obviously, they're all against the dollar. They have slightly different qualities about them, I guess, but
yeah,
just 3 pairs, mate. You can easily catch 2 trades a week.
Yeah, I find if I watch any more than, to be honest, even if I watch more than one, to be honest, my mind starts melting at this stage of my development. So yeah, I think I've been on GU pretty much time. Found it much easier just to stay with that.
Yeah, well, I mean, what you'll find as well, mate, is obviously with EU and GU, they'll often have the same setup as well. Because obviously, if we're talking about EU or GU, say sell, it sort of ties into the dollar strength. So if the dollar's gaining strength, and it's gaining strength over euro and the GBP, then they're both effectively going to sell off because the US market is a bigger market, so it's more powerful. So, so yeah, they'll often present the same setups anyway. I mean, you can obviously, if they both do present the same setup, you then can look at Euro GBP as well to decide which one would be the best one. So if you're looking at sells and Euro GBP is moving up, just draw an arrow. So if Euro GBP is slowly heading that way, that means obviously the Euro's stronger than the pound at that point.
Yeah.
So that would mean GBP is the weakest of the two, which means if you're trying to sell Euro USD or GBP USD, then GBP USD would be the best one to sell because obviously a weaker pound and a stronger dollar against a strong dollar and a slightly stronger than the pound euro. So, but I mean it's not essential, mate. It's just if you've got the time to look at the charts, you can maybe spend a few minutes looking at this one as well. Just go, right, that one's showing which one's strong and which one's weak. But it's not necessary, mate. It's just something that you might want to just have a glance at it. Like I say, if you can see this is heading down overall or up overall, if you're trying to sell one, see which one's the weakest or which one's the strongest. And
cool. Thanks.
I think I might have done an actual session on that, mate, as well. I'll try and find
I think I've
it.
watched it recently. I'm sure I have.
Yeah, if not, mate, just let us know and I'll do another little recording on it and I'll try and explain it far better than I just did.
No, that's really clear. Thank you.
Yeah, sweet. I'll get to these questions quick. My Asia session set on the indicator times. Good question, mate. 6 and 2, mate. So obviously, I think the indicator is like American or something. So 6 p.m. and 2 a.m. their time translates to 11 and 7 on our charts. So 6 and 6 p.m. No, was that 6 p.m. or was it 4? Yeah, sorry, 6 p.m. Yeah. 6 p.m. and 2, mate, is what my indicator's at. So as the UK yourselves, then it needs to be the same. I've narrowed mine down to 6 pairs. 20. Yeah, it's yeah, you can overload yourself, Luke, with too many pairs, mate. It's like I said previously, we're only looking for 1, maybe 2 trades a week if we're looking to pick the better trades. So you don't really need to be through 20. I only do it on my other system because it'll offer maybe 1 trade a week over the 30 pairs. So it's for your general supply and demand type trades, mate. It's not needed. It's just I just do it with my other system because if I focused on 1 or 2 pairs, I'd catch 1 or 2 trades a year, maybe. That's if you've got a match up. So yeah, I was going to cover. So just bear with me, lads, because I said I was going to go over a couple of pairs for Friday or Saturday. Random message. Should have wrote this down at the time. Struggling to see where my entry was on Euro USD. So back to this one. So Daniel asked where my entry was on Euro USD. Obviously, we know it's still in an imbalance down here, so I'll not cover that again. It was a difficult one, this one. I'm surprised I actually got it right. Right, so obviously on the 1 minute, obviously I'm going to jump down to the seconds charts. So at the minute, it looks like this is probably the imbalance to be filled for an entry. I did split risk on this because I thought it might come down here as well. So I put half the amount on here and half the amount down here.
What did you do? Just make the stop loss bigger on the top one, or just let it stop out if it was going to come?
Yeah, I'd have let it stop out, mate. I was debating setting this one and having
that as the stop loss, something like that.
Yeah.
But
big, isn't it?
yeah, it's. I just thought I'd rather half it than. I mean, if I covered that, that's 4 times bigger of a stop loss than what I actually had. So I would have lost.
Yeah.
I was better splitting it in 2 and losing 1 and then gaining the other. So yeah, split risk. Just drop through the time frames and obviously maybe try and explain a bit. So obviously this is a big bit of imbalance here, I believe. There's also a little bit here, as you can see. Let's just drop again. Now, obviously now that I've dropped, these candles here, they're just not it's a little bit wicky. It's a big push. If you was in the trade at this point here and you see these candles, you'd be well happy. But it just looks different to this candle here. And obviously, this little accumulation here is the one that leads to the break of a change of character, break of structure. Just drop down there just because I don't know if it gets worse. Yeah, obviously the 10-second really doesn't help this zone here. So obviously this is still a decent sized candle. This one's maybe similar, but I think I always struggle with explaining this sort of thing because I mean it looks terrible on the 5. So obviously you've got nothing in here that looks remotely resembles any kind of imbalance here, whereas this one here is. So that's why I split the differences, because even on the 5-second, this is still a decent push on the 5-second, and this is just obviously it's all nice up candles, but there's no I don't know if it's volume's the word, but they're just all tiny candles. So price was moving up, but not in the way I would want it to. But I was still like I say, I still split risk because of this here on the 1 minute. I should have maybe just gone full risk here and full risk there or whatever if it took the first one out. But I was trying to be a bit safer and
always another day, isn't there?
Well, that's the thing, mate. I think obviously we're traders, or we're trying to be traders and things like that. But in reality, I think a first job as a trader is to not lose your money. So if you don't lose your money, you're not going to go broke as such, you know. So we make these decisions to protect ourselves and things, but obviously it's all hindsight as well. Like it's hindsight saying that I should have gone full bore here, but until it happens, you don't know. So it's just one of them things. It was the right. I made the right choice. So I had the right zone. I was half risk. I still. I don't know what percentage it was because I mean self-funded, so I'm not risking a 1% or anything, a bit more, but so it was still a 1 to 14 and still a great trade and made money. So
do you actually like? I don't know the answer to this, and I wondered if you did, like the mechanics of what's going on in the market when it comes down and mitigates or it feels an imbalance. They're open orders, are they? Or
so do you mean like what creates it sort of thing, or what
yeah,
is going?
I mean, why does somebody feel the need to come back down there and fill it? What's going on in the background is.
Yeah, it's so. What I would say, mate, is obviously I don't know 100%, and I don't imagine anyone probably does, but
no.
Obviously if you think about it from a obviously supply and demand point of view, or an orders kind of world. So in here, obviously this plummets in obviously this is a 1 minute candle. I'm assuming that was news or something, but for this moves so fast that it appears to be only sell orders. So obviously we're under the understanding that for every sell order you need a buy order. So the idea sort of is that it will come back and fill this because it'll want these orders to mitigate all this price. Obviously, there's one big gap in the candle here. Now, obviously, whether that's actually the truth or not, obviously I can't guarantee that, but that's what we're generally told, I guess.
Sounds plausible.
Yeah, obviously they've got. That's why we call it imbalance as well, because it's balancing the book work. So you're collecting the orders from here. So in theory, obviously I know I was in a buy, but if this was a sell area, as soon as it's got its orders from here, it can then continue to sell or whatever. So, which obviously it does up here. It fills obviously some imbalances around about here. So that's the belief, mate. Obviously there'll be imbalance in here that it fills in.
Well, whatever it is, it seems to work.
Yeah. It's. I mean, I've got a slightly different theory on manipulation. So if you use this here as an understanding, it sort of might tie into similar to it. Like if we've got a trend line here, something like that. So we've got like equal or trend line or equal highs up here. Obviously you would think that your average Joe maybe on after this third touch and it rejects, if it comes and touches the line again, it does there. You would expect that your average Joe traders are thinking that this is a strong resistance or support. I can't know what it's called, which way it is, but a strong resistance, and fourth touch it might sell off again.
Yeah.
And then obviously what the banks do is after the touch it pulls back a little bit, then the manipulation happens, and then the market sells off. So if we from here, that's the wrong order. So possibly from here, the banks say put an order in for buy to manipulate the market as such. So they take everybody's order that thinks that that's a strong resistance, so that that's a buy, and then from this high, they then believe that they will put in a sell order from the same point as soon as they take people's money. And then obviously there's sell off down there. So you've got a buy order and a sell order, but that's edging, obviously hedging the market. So obviously they need to close the buy order out at break even. So obviously that I think that's in my head how it works. So they come back here to mitigate out of this order at break even, and then they make money on the sell, because obviously they know they're going to mitigate it, close the buy order, they know it's going to continue to sell. Now, my alternate theory is that the buy order, if they're doing it purely to take orders, like that might be illegal in some way because they're manipulating the market. But if they close that order out at break even, then does it make it illegal because they've not made money from that order? But they know they can make money on the sell once they mitigate out of that order, if that makes sense. So in my head, it makes sense that they would do that to not get fines and things, because they don't make the money on the first order, they make the money on the opposite order once they've taken everyone's money, things like that. Or obviously they do it to move the market in the direction they want, sort of thing. But again, I've got no evidence to sort of say back that, but it sort of makes sense because you see, obviously we see all the time that obviously liquidities get taken, mitigated, and then continue that way, sort of thing. You can pretty much find it everywhere. It's probably trend line under here.
here, manipulation, mitigation, so.
Yeah,
I think all this stuff while I'm at work, a bit quiet, But, yeah. So yeah, that was the entry for there. He wanted me to do. I said I'd do NAS 100 as well. But again, it's pretty much the identical setup. So see, it fills something in here. So as you can see, what did look like huge imbalance on like the 1 minute sort of like disappears on here. So we start getting maybe a tiny bit under here on the 15-second, somewhere around here. It's really starts to open up a bit. So yeah, see it's filled in imbalance. Yeah, I'll drop lower and see if it's clearer. Yeah, it's still the same, but obviously it fills this imbalance here anyway. Pretty much it fills it. And then obviously it does the exact same thing. It's obviously change of character high would be up here. You get change of character there. Now this one's, I believe, was really difficult to view. So obviously on the 15, I've got from this top of this box here. Drop a bit more. Still the same. But on 5, I think it is. Yeah, on the 5-second here, we've got this little void here. So you mark the line from the bottom of this candle here. That's what it actually appears to mitigate out of, which is why I've got this green line here. Well, that's often sometimes the difference, when you're trying to get it so tight, is the difference from say like the 10-second to the 5-second can change quite a bit. You see, literally, I think that's the entry. And there, that one there. So as you can see, it's on the 15-second, 10-second, it would have missed, but on the 5-second, if you obviously to the underside of that candle that really starts to buy up from here, then that one would have hit, and then it goes and does its thing. Play that out. So does its thing. So possible 15R. Again, nothing to turn your nose up from. So it takes the Asia high. Looks like it fills something in here, but I'll not go into that. Stevens asked, how do you manage your trades as in terms of trailing stop loss, or just set and forget and wait for your TP? I'm TP guy. I mean, I can't say I set and forget because it's just not true. But I try my hardest not to interfere with doing anything. So obviously, if I'd have been in this and this was me TP or whatever, then I'd have maybe watched it or looked at every 10, 15 minutes or whatever. But I think trading's almost an experience game.
So the more you turn up and see, the more comfortable you will get. So you'll get to a point where you go, you'll just maybe just start realizing that if you're watching all this, say if it taps you in here, then it comes here and it starts pulling back, and you start worrying. Like if that was your TP and you decided you shit your pants here and decided to close it, you've just stopped yourself from winning. So I think interference is damaging. So if you journal, we very rarely accommodate break evens into our journaling data. So if your strategy says that you win 60% of the time, so like you could do this 6 out of 10 times or whatever, if you then from this point, as soon as that leaves your entry and you go, sure, I'm moving to break even here or just above break even, you've not let the trade play out like you would have in your back testing. So break even's it's a no-go for me unless I'm already well up, sort of thing. So I'm not a fan of it. It's if you're scalping, I completely understand it. But even just on this system, like generally, if it's breaking the Asia low, there's a high probability it's going to take the high. So even if you just went for something like that, you don't need to be interfering with it. It's just, yeah, it's when you first enter a trade. So before this taps you in here is when you set your limit order and you decide that this is what you want to enter and you risk, you'd not be happy if it went straight to your stop loss, but you've basically said that you've accepted the risk when you put that trade on. So why, once you've come into a little bit of profit here, however much that is, why, when you go into a little bit of profit, do you then feel the need to go, oh, I need to not lose at this point because you've not let the trade play out. You accepted that you was going to lose 1% if it hit here, sorry. So you just kind of need to go, well, it's just price action. It is what it is. If that was your valid entry and your system says that your take profits up here, then taking partials or break even or anything like that is just detrimental to you, because again you would have done all your back testing based on not doing any of this stuff. So you would skew your own data and details by adding in variables such as break even and partials and things. So just literally whatever your back testing suggests and says, then that's what you should be doing once you're in the trade. So I'm against it. I try not to manage trades. If I was in this and I would have probably, if you decide that this imbalance fill here is what you want to sort of like, if that's your take profit and you start seeing it rallying up, maybe move your stop loss just below that and then move your take profit higher and then follow it. But yeah, I've done enough back testing to know that I can just leave it to take profit. If it wins, it wins. If it done, it done. I'm just comfortable with it. Yeah, Tom says fuck break even. I agree, mate. It's for pussies, really. Has anyone got any other questions? Anything you want me to go over, guys?
Lee, I wasn't trading on Friday, but I had a look at Euro New Zealand, and I thought that there was a buy there, but as it happens, it turned around and went the other way. So I think there initially was, like I say, I wasn't trading it. I was looking after the little one, so I wasn't like watching it intently. But I think that I saw a 15-minute change of character I thought.
This one here, mate, from this.
Yeah, so I thought
Yeah.
that bit, yeah. So when it was then, back when it came back down to, hang on, what time were we at? Yeah, Friday would have been in the morning, sort of 7 something, yeah. And then, exactly there, yeah. So if you then went down to the 1 minute, you got then a 1 minute change of character. It came back, retraced back, mitigated.
Yeah.
And off it went for a little while, and then it turned tail and went back down.
Yeah. So.
And
sorry, go on, mate. Carry on with your question.
No,
sorry.
I just thought it was. I was just wanting to check that I didn't see it wrong, and maybe it just turned tail because it turned tail. But I didn't. If there was something else I was missing, like a bigger story in the background or something.
Yeah, I'll take a look, mate.
See, at that point, I thought it was on the 2 hour. It didn't look like it. It looked like it was about to head back up again rather than straight down.
Yeah. So, I mean, it looks like it's pretty fairly bullish, mate. I do think sells are the right sort of. As I say that, let me. We're heavily ranging in reality, I guess, but. I mean, that's broken up here, so. This might have been your issue, mate.
It was somewhere around the sort of 7s in the morning.
Yeah,
like
so I'm just looking, mate, because obviously we've got this trend line going on here.
Yeah.
So I mean, it's a clean trend line, so it's the bottom of that. It's bang on touch there. So you're obviously you was trying to sell buy from along here, weren't you? That's right. So obviously, what you have missed is this trend line, mate. So what it's obviously done is it's where you're obviously this is then broken, done a change of character.
Yeah.
Above this, but the ultimate target was to take this trend line liquidity, mate. So there'll be stop losses under this big. I'll change the side of it, mate. You can see it. That trend line there, mate. So as obviously because there's 1, 2, 3 touches, it's a super clean trend line. So again, after this third touch, because we say that on a trend line, it's minimum 3 touches to confirm a trend line. So this third touch here will be again to trend line traders and your average Joe. There would have been, and obviously you was one of them in the end, like without realizing. So
well, luckily I wasn't trading, so that was good.
Yeah, so if I extend that trend line, mate, just make it smaller again. So obviously I've extended that trend line now. So what a lot of people would have been doing is they would have gone on that as soon as that touches that price action there. They would have been setting buy orders, which is so if you was trading, that's what you'd have done. And then they'd have been going. Obviously, it's giving you a change of character as well, so it's tricks people as well. So there'd have been a lot of orders, something like this. Obviously, I don't know where people's TPs would have been, but stop losses would have been below this line, this trend line. So this is there's likely obviously in here some manipulation that took place.
When I started looking at it, it was about 7 in the morning, and so I went down to 1 minute. I saw what a change of character, and then it came back down. Mitigated. So I think that even if I'd been in it, if I'd have seen it turn around that much, I maybe would have got out anyway. It's hard to say when I wasn't in it.
Yeah, so like obviously the only advice I can give from that, mate, is obviously try and be a bit. I know it's hard to say sometimes, but try and be a bit aware of higher time frame liquidities and things, because then obviously because obviously we know that this is going to get taken out at some point. So if you're trying to buy from there, you might get a little reaction like you did from here or whatever. But there'll be that much money under this trend line that the banks are going to want to come and take them orders, mate. It was just wrong place, wrong time sort of thing, you know.
Yeah.
If that wasn't there, I would have said like, yeah, I'd have maybe bought from there myself.
That's cool. Thank you very much.
No worries, mate. I'll just do it. Yeah, so obviously Tom says liquidity is the first thing he marks out. So obviously if you can't spot liquidity, there's a good chance you become liquidity. So it's, as Tom says, it's one of the first things he marks out. I actually do have sessions where I'll just come on, sit on like the 4 hour or 2 hour and just mark out like trendline liquidities and equal highs and things, because it become targets, whether you're trying to be in the trade or not. So obviously there's a good chance now that it's taken, this might now mitigate something down here, maybe an inbound fill down here or something. It now might target these afterwards, this trend line in here. So that's a possibility for this coming week. Because obviously what we do often see after liquidity is swept is we do often see a break to the opposite side, so a break of structure. Try and find another example. Something like that.
Yeah.
Yeah, 3 perfect touches. See that? 2, 3. Manipulation. Obviously, it double sweeps it, to be fair. So it takes it here, takes it there again, and then obviously starts breaking below here from here, mate. So yeah, it's very common to liquidity to get swept, break a structure, or change a character, whichever one, you know. And yeah, so like I said, this is.
And sorry, did you say what time frames do you normally do sort of sessions on? Just going through and seeing where liquidity is, 4 hour and sort of anything like that.
So yeah, I mean generally I'm flicking through on the 2 hour, but what I sort of say is because 2 hour, obviously from the 4 hour to the 2 hour you get twice as many candles, so on the 2 hour you can't always see quite as far back as you want to. But 2 hour gives you a clearer. Sometimes you'll see trend lines on, say, like the 2 hour that you might necessarily not see on the 4 hour. Such so I generally flick on the 2 hour, but if I will flick on the 4 hour just to double check sort of thing. So yeah, 2 4 hour, 2 hour, 4 hour. I mean, I'll even look at the 15 as well. There'll be stuff on all the time frames. Yeah. So I marked this one on the 2 hour, I think, but it's there on the 15. But I can't zoom out as far on the 15, so it depends on. It depends how you're trading as well. So if obviously the Asia range sort of system that I'm trading, sort of supply and demand basically, is these sort of trend lines don't always matter, because I'm just usually aiming from the Asia low to the Asia high, or something just out of the opposite. So it's not always necessarily, but
I suppose it's good to be
aware.
Practice.
Yeah, it's good practice to do it, mate. So
all right, cool. Thanks, guys.
No worries, mate. If anyone's got any more questions, chuck them in, lads, because I'm running out of things to say. UCAD played out this week as well. It's difficult because I pretty much just say the same thing every session. I feel like, I try not to bore everyone, but
mate, it really helps because just keeps repeating the same thing. It goes
eventually. Yeah. I understand that, mate. So obviously, again, this is exactly the same. Obviously, this is your Asia low here. It fills an imbalance here. You can even see that on 5, I think. So this down and up candle here will be a bit of imbalance on like the minute or something like that. So it fills it again. This is the low. This is the high that puts in the low. And then obviously it breaks it here. We're on the 5 minute at the minute, so this will be body close above on the 1 minute. So that actually changes character again. And then just literally mitigates an imbalance. Buys off. Show you on the minutes as well. So as you see, changing character here. So actually changing character. And then again, as soon as that wick's above it, then like I say, from this point here, as soon as that,
so it can be just a wick. It can be just a wick then, yeah.
Yeah. So I do much prefer body. So if I was on a higher time frame, I would definitely say body. But on the lower time, so like from like the minute down,
yeah,
I would say wicks are fine, but I just prefer body. Yes. I mean, there's no like. Obviously, the banks are not looking at candles anyway, I assume. So they're not going, oh, we need to make sure price candle closes above that one to give them the confirmation. It's on their chart, it's just going to be a line as such. It's going to be something like that. So as long as price goes above it, it's what it is, sort of thing. If you drop, say, if you go the difference from say the minute to the 30, it changes again. So price on for the banks or whatever, price would have gone above this price action here. So it went above it. So on anything from the lowers, mate, wicks is fine. Just prefer body. I think if it body closes above it, it's then sort of telling you that price has been above the previous high for long enough, if that makes sense. So I do prefer it, but it's not essential. But obviously, I would always say like people should be testing that out anyway. So I mean, I've not tested it out myself. Obviously I'm successful at doing it, so I know I'm happy to take the risk on that it does whatever, that it does as long as it goes above it. But it might be more probable. I might be 50% more. My win rate might improve double if I was to say no, I'm only taking the body closes above sort of thing. But I don't know, mates. It should all be tested, I guess, but sort of it works for me. So then obviously as soon as it does do it, it's terrible on 15 seconds. Terrible. 30 seconds. Obviously we've got a big impulse balance here. And obviously that's what it mitigates. Obviously there's a bit of imbalance below here. And I don't have the answer for this. But I just want to point it out. What I'm finding is, or what I found, I've been trying to figure it out for a long time, but I just never got round to it. Actually, like looking deep into it. So we've got a little bit of imbalance at this very
very low. The thing that filled the imbalance, or is it the manipulation, something like that? There's usually a bit of imbalance that is very fierce to push away, and it's often because obviously I'm looking for imbalance fills as an entry, usually like the lowest one that could be. It's very often that this is just, it's almost like it's irrelevant and not, it's got no meaning. It very rarely holds on this last little imbalance. So I don't know if like I'm sort of like making it fit a story, I guess, but it's almost like this fills the imbalance here. That might trigger buy orders, so that's not the order that the banks are trying to get out of the imbalance to fill. This might just be purely they've triggered loads of buy orders from this imbalance fill. It doesn't do its job, and then they've got to force the breaker structure from here. This is why this one's the imbalance fill that gets mitigated or filled.
That's useful to know.
Yeah, it's like I say, I can't. I don't know. I can't really explain it. I just know that this low imbalance fill fails quite regularly. I mean, sometimes it's the one, but it's got to be a certain set of candles. So I'll have to see if I can find them on the tablets. But on my main system, there was 3 types of entry model. So obviously, from previously, it had all of its confirmations. So from that point, from this, let's say this was the low, and it breaks will be like it does. Then I switched to the entry model. So entry model's different from your. I think entry model's different from your system. So from as soon as this breaks above here, we're then looking for an entry system from in this price action here. So some people would wait for that to go, and then they would wait for a type of candle. Whereas I'm looking for an imbalance fill. That's my entry model. Some people will look for a doji candle. Some people will press buy as soon as it breaks above here. So that's your entry model. And yeah, mine's usually like the lowest. I say lowest. It's not always the lowest, but generally looking for the lowest imbalance because that's the safest option. So if like this was the entry, the one down here, because it's the last imbalance, price is either going to go fill that and then turn, or it's just going to take it out, which it would have taken out any other as well. So this one down here is technically the safest because it's the furthest price action away, but obviously it comes with its own risk because this can be liquidity as well because it's a low. So, but yeah, I used to have 3 types of setup that was I could sort of like look at a price action and go, no, I don't think it's going to react from there. I think it's going to react from the one that directly causes the change of character or breaker structure up here. But I can't remember another one, but I can't remember what it was. But it was this one, and was a possibly other setup, but I can't remember what it was now because I don't use it as such. I just use the 2. But I'll see if I can find it and I'll post it as well if I can. This might still give another entry at some point from that imbalance fill. Also we've got equal lows under here, so it might take liquidity, fill imbalance, and so. But we'll keep an eye on that. It's not something. It's because it's reacted from here now. I would probably, if you guys are going to mark it, I would recommend that you draw that box, but wait for a reaction out of it first, rather than just setting a pendant at this point. So as you can see, same as every other set entry I've posted this week. It's just one thing, one system, master it,
You can make serious money. So let's go big and go 3.1 slots. It's just shy of 17R, so it's what master one thing. You can make some good money, and I think I was talking to someone as well in the week. You sort of can't expect consistent results if you're not trading consistently. By that I mean is if you're approaching the market and you're taking 3 different types of system a day, you're not going to get consistent results because you're not taking the same system. Like this one and then all the others I've shown you tonight, it's been sweep of the low into the Asia low into an imbalance, change of character, and buy. Like if you then trade in a different system but expecting consistent results, it's not going to happen because you might take lose all your systems and blow your account before you get a chance to find your winners. So highly recommend just sticking to one thing, whether you do it across multiple pairs, multiple accounts or whatever. But yeah, just this, I mean, like I say, this system's given, I think across all the pairs this week that I've had a look at, it's probably given close to 20 entries this week. Obviously, you won't catch them all because some of them was all at the same time and sort of correlating pairs, but it was a good week. So, master one thing, guys, stick at it. If you've got any questions, please fire them away my way. About to end the session anyway. But again, here, takes the high, just sells off. Don't mitigate that one. But... So, was you going to say something, mate?
Yeah, just to say cheers, Lee. That's a really good session. Thank you.
No worries, mate. My absolute pleasure. I'll give it another few seconds in case a question comes in. But if not, guys, I'll see you all later. Luke's just chucked in, do I ever trade against a higher time frame analysis? Just wondered. For this system, mate, yeah, it's obviously the higher time frame being in your favor changes the probability and the amount I would hold for. So obviously at the minute gold's pretty bullish, so but I'm fully expecting it's gonna obviously do a pullback, which it's done. So I don't think I would have, if I was looking for a buy on gold, I don't think I'd have been holding it thinking that it probably do a retracement, but it is higher time frame, very bullish, obviously. But yeah, if you can catch one, that's got structure in your favour, I'll just see if I can find something else to shut the chat.
Lee, I'm going to go. Thanks, buddy.
Yeah, no worries, mate. No worries, mate. Cheers. Bye bye.
Thanks. See you. Bye.
Bye, mate. Bye.
See you, everyone.
So structure-wise, obviously, we've possibly got this as a structure here. So not sure if you can pass that as a break of the high, but obviously it's pulling back here. So price might actually want to do that on the higher time frame. Obviously it's pulled back here, but if you catch a buy from say down here, there's a real possibility that you would be maybe looking to hold that or leave runners to take a new higher high. Or you'd have, yeah, if that's the higher time frame, you'd be more inclined to hold, I guess. But so yeah, I do go against it, but I would prefer it to be with it and reaching prices of lower down into this leg here, the better, I would say. So yeah, that's that. I'll call it there, guys. Anyway, any questions, guys? Just fire them away. Send them in the chat, and I'll see you guys later. Thank you very much.